Friday, January 30th, 2026. Mark this date. This is the day the silver market officially stopped making sense. The price didn't just drop, it collapsed. We are talking about a vertical line down. But try to buy a single ounce right now. Just try. You can't. The shelves are bare. The buy buttons are grayed out. If you are looking at your portfolio and feeling sick, stop. Don't sell a single ounce because the numbers on your screen are lying to you. What is happening right now defies the basic laws of economics. It is mathematically impossible for the price to crash while the supply disappears. Yet that is exactly what we are watching. Let's look at the damage. Silver fell from $121 to $95. That is $26 vaporized in a matter of hours. Gold isn't safe either. It plunged from $5,600 to $4,950. $650 was wiped off the board. On paper, it looks like a bloodbath. It looks like everyone is selling. But here's the glitch in the matrix. Here's the part that proves the game is rigged. In a real market, when the price crashes, it means nobody wants the product. It means warehouses are overflowing. Sellers lower the price just to get rid of it. That is economics 101. Supply and demand. When supply is high and demand is low, prices drop. But look around. Is the supply high? No. The Perth Mint in Australia suspended sales. The US Mint suspended. The Royal Mint in the UK out of stock. Dealers in India are defaulting on deliveries. Even Costco has slapped limits on what you can buy. Think about how insane that is. The price is plummeting, but the product is vanishing. It's like walking into a car dealership, seeing the prices slashed by 50%, but being told there are 0 cars on the lot. It doesn't happen, not in a free market. The price is going down while the whole world is running out. Something is very wrong. We are the money rewind. This is where the headlines stop mattering and the plumbing of the financial system gets exposed. You need to understand this, or you are going to make a mistake that costs you a fortune. A few days ago, I warned you about the $117 zone. I told you a crash was coming based on a 30-year pattern. But I will be honest with you, I did not expect this. I did not expect the physical market to completely break under the pressure. I did not expect the mints to close their doors. We are seeing a total disconnect between the price on the screen and the metal in the ground. So how is this possible? How can silver lose 22% of its value while being impossible to buy? To understand this, you have to realize something crucial. There isn't just one silver market. There are two. And right now, these two markets are at war with each other. Market number one is the paper market. This is the comics. This is where bankers, hedge funds, and algorithms play. But here's the secret. They aren't trading metal. They are trading receipts. They are trading IUS. It's a digital fantasy. Imagine a poker game where everyone is betting millions of dollars, but there is no actual cash on the table. Just chips, just promises. That is the paper market. It's a casino. Trillions of dollars fly back and forth. Contracts are bought and sold, but at the end of the day, almost nobody actually asks for the silver. It is just a bet on a number. Then you have market number two, the physical market. This is the real world. This is the coin in your hand. The bar in your safe, the actual metal needed to build solar panels, missiles, and electronics. This stuff is finite. You can't print it. You can't digitize it. It has to be dug out of the ground. For decades, the paper market dictated the price of the physical market. The tail wagged the dog. But today, the link snapped. The illusion broke. The computer screen says silver is worth 95. The real world says you cannot get it for any amount of money. One of these is lying to you. Do you believe the pixelated number on a monitor, or do you believe the empty shelf? The evidence is piling up fast. Let's look at the Perthman in Australia. This isn't some small shop. This is one of the most respected bullion producers on the planet. Governments trust them. Big money trusts them. And right now they are sending a very clear signal. On Thursday morning, the alarms were already ringing. This was before the crash, before the panic. Silver was sitting at $17. It looked calm. But inside the Perth Mint, it was chaos. They sent a notice to their biggest distributors. I have the document right here. It is terrifying. It says, due to increasing worldwide demand, we have decided to pause taking wholesale orders. Pause. Stop. Halt. They shut the window. They said no new orders until February 23rd. That is a month of silence. Read that again. Increasing demand, not decreasing. Backlog, not surplus. Pause. Not for sale. Not. This was when the price was high. Everything looked fine on the news. But the mint was already drowning. They even started using a specific phrase, monthly allocations. That is fancy talk for rationing. It is what happens in a war zone. It is what happens when the food runs out. You don't get what you want, you get what they give you. And this isn't a mom and pop shop. This is the Australian government. Australia sits on some of the biggest silver mines on earth, and even they can't find enough metal. Then the floor fell out. Silver crashed from 117 to 95, a $20 discount in the blink of an eye. Now use your common sense. If the mint was broken at the high price, what happens at the low price? Every shark in the water smelled blood. They saw a 22% discount on an asset that is running out. They didn't panic sell. They bought. They bought everything that wasn't bolted down. The crash didn't fix the shortage. It poured gasoline on the fire. You might be thinking, this is just a logistics problem. You might be thinking, the trucks are just late. The warehouses will refill next week. You would be wrong. This isn't a shipping delay. This is a mathematical impossibility that is about to wipe out the wealth of anyone holding the wrong assets. I'm going to explain exactly who is pulling the strings on this price drop in a minute, and it is not who you think it is. But first you have to see what happened in America. The United States Mint, the official producer of American money. When the crash started, their website went dark, temporarily unavailable. If you called them, they said they were updating prices. That is a lie. Here's the truth. The price of silver was moving so fast that the government couldn't keep up. They were selling American silver eagles for $91, but the raw cost of silver was screaming higher. They were selling dollar bills for 90s. They were losing money on every single coin, so they pulled the plug. They stopped selling, and when they turned the website back on, the price didn't go down with the market crash. It went up, way up. The price jumped from $91 to $169, an 86% price hike overnight. Think about that. The news says silver crashed. The chart says silver is down. But if you actually want to buy a coin from the US government, you have to pay double. The 2026 Silver Eagle delayed. Subscriptions sold out. They cannot sell you silver at the old price, and they don't have enough silver at the new price. It gets worse. Look at India. India is the heartbeat of the physical silver market. They buy more than almost anyone else. Right now, Indian dealers are defaulting. Do you know what default means? It means they took the money. They promised the silver, and now they are saying, sorry, we don't have it. Amazon India sellers are canceling orders after taking payment. People are furious. They are posting screenshots of empty hands and empty promises. This isn't a supply chain issue anymore. This is theft. This is a complete breakdown of trust. Then look at the United Kingdom, the Royal Mint. They have been making coins for 1,000 years. They have survived wars, plagues, and depressions. Today they are out of stock. Go look for a 1 kilogram bar, the most basic standard bar you can buy. Gone. Perth, the US, the UK, India. This isn't bad luck. This isn't a coincidence. When every major mint on 4 different continents runs dry at the same moment, that is a systemic failure. The gears are grinding to a halt. And if you still think this is normal, look at Costco. Yes, the place where you buy 50 rolls of toilet paper and a $5 chicken. They sell gold and silver bars now, or at least they used to. Costco has slapped strict limits on purchases. They are rationing. Costco is a wholesale club. Their entire business model is buying bulk. But now they are telling you, Ayo, no, you can only have a little bit. Why would a store that wants to sell volume suddenly stop you from buying? Because they can't replace the inventory. The demand is so high that it is breaking the supply chain. But here's the scariest part, the part that nobody is talking about. Let's cross the ocean. We need to look at China. If the empty shelves in the US didn't scare you, what is happening in Shanghai will? I have the data right here, fresh off the wire. January 30th, the Shanghai Futures Exchange. This is the big league. Their vaults currently hold 455 tons of silver. That sounds like a lot, right? 6 million ounces. You might hear that number and think, okay, we are safe. You are not safe. Here's the number that made my jaw hit the floor. In just the last few days, 94 tons of silver were pulled out of those vaults. Gone, vanished. Just today, in one single trading session, almost 27 tons were removed. That is nearly 900,000 ounces taken out of the vault, put on a truck and driven away. Do the math with me. If you have a bathtub and you pull the drain plug, the water disappears fast. At this exact speed, the Shanghai silver vaults will be empty in less than 3 weeks. Zero dust, nothing left. For context, the world uses over 1 billion ounces of silver a year. The 6 million ounces left in Shanghai, that is 1%. That is a rounding error. That is barely enough to keep the lights on. And nobody in the financial news is telling you this. They are talking about stock prices and interest rates. They are ignoring the bomb ticking under the table. But here is the twist. This isn't just about money anymore. This is about survival. China has classified silver as a strategic national security asset. Think about what that means. They treat silver the same way they treat materials for missiles, the same way they treat chips for AI. They are restricting exports. They are saying no silver leaves China, so connect the dots. They are banning exports. They are draining their own vaults. They are moving metal from public view into private bunkers. What does that tell you? It tells you China knows something we don't. They know what is coming. They are grabbing every physical ounce they can find while the paper price crashes. And this brings us to the most important question of the day. If the world is running out, why is the price crashing? Who is selling? I'm going to tell you exactly who is manipulating this market in a moment and how they are using paper leases to trap you. But first, you have to see the pattern. Look at the clock. Nearly all of the selling this week happened during US market hours. When is Asia trading? Quiet. When is London trading? Stable. But the second New York wakes up, the second the opening bell rings on Wall Street, boom, red candles, massive dumping, the price collapses. Then New York goes to sleep. The market stabilizes. Sometimes it even goes up a little in Asia. Then New York wakes up again and the beating continues. This isn't random. This is a coordinated attack. Here is the game. And if you understand this, you win. If you don't, you lose everything. American banks are selling paper silver. They are selling contracts. They are selling digital promises. They type a number into a computer and hit sell. They don't have the metal. They are creating supply out of thin air. It's like printing monopoly money and selling it for real cash. But while the West is selling fake paper, the East is buying real metal. Buyers in China, India, and the Middle East are watching the price drop and they are laughing. They are backing up the trucks. They are taking physical delivery. One side is playing a video game. The other side is taking home the prize. This is the greatest wealth transfer in history happening right in front of your face. The West is dumping paper derivatives to suppress the price. The East is using that low price to drain the world of physical resources. For decades, this has been the pattern. The West sells paper. The East buys gold and silver. But I have never seen it this aggressive. The disconnect is total. Don't be the victim here. The banks want you to panic. They want you to see the red chart and sell your real silver. Who do you think buys it? Someone in Shanghai? Someone in Dubai? They will happily take your real wealth in exchange for their worthless paper. And if you want proof that the system is breaking, look at the lease rates. This is technical, but keep it simple. The lease rate is the cost to borrow physical silver. Usually it is very low, maybe almost zero. If there is plenty of silver, it's cheap to borrow. Right now, lease rates have exploded. We are seeing reports of 8%. Some reports are showing 39% to borrow a bar of silver. That is a panic signal. That is the market screaming, we don't have any metal. If I have to pay you 40% interest just to hold your silver for a little while, it means silver is more valuable than cash. It means the collateral is gone. Think about what a high lease rate actually means. It means the owners of silver are scared to let it go. They are saying, I will not lend you this metal unless you pay me a fortune. It proves the system is out of ammo. So, let's tie the threads together. We are watching the funeral of the old pricing mechanism. For 50 years, the price of silver wasn't set by miners or jewelers. It was set by bankers trading paper. They traded hundreds of millions of fake ounces every day. The real physical market was tiny. It was an ant next to an elephant. This allowed the paper boys to push the price wherever they wanted. They controlled the board. But now the game board is flipping over. Physical demand isn't just knocking on the door, it's kicking it down. Mints are broken. Vaults are empty. Dealers are stealing. Lease rates are vertical. The paper market screams 90 filers. The physical market whispers, sorry, we are closed. Something has to snap. You cannot have two prices for the same thing forever. Either the paper price skyrockets to match reality, or the physical market vanishes into the black market completely. I believe we are days away from that break. Now, what does this mean for you? Because knowing the building is on fire doesn't help if you don't know where the exit is. I'm going to be blunt. No sugarcoating. If you hold physical silver, real bars, real coins, do not panic. I repeat, do not panic. Do not let a red line on a computer screen trick you into handing over your treasure. Look at the facts, not the chart. The Perth Mint is closed, China's hoarding. The US Mint raised prices by 80%. You are holding the only thing the world is running out of. Why would you sell the lifeboats while the ship is sinking? The paper price is noise. It is a distraction. Your metal is worth what a desperate buyer will pay for it. And right now in the real world, that number is a lot higher than $95. Hold the line. But if you hold paper silver, do you have an ETF or a futures contract? Ask yourself one question. If you called your broker tomorrow and said, I want my silver delivered to my front door, what would they say? They would laugh. They would say, no, because they don't have it. You don't own silver. You own a digital promise from a stranger. And when the music stops, promises get broken. If you are trying to buy right now, good luck. You are going to see premiums that make your eyes water. Japan is paying 60% over the spot price. Dubai is paying 40%. The screen says 95, but the street says 130. If you can find metal at a reasonable price, grab it. It won't be there tomorrow. And here is the paradox that will melt your brain. The lower the paper price crashes, the faster the physical silver disappears. It's counterintuitive. You'd think a crash would scare people away. But because the shortage is real, lower prices just act like a clearance sale. It drains the supply even faster. The crash is actually making the crisis worse. Now, I know what the skeptics are saying. I can hear the comments already. This is a conspiracy theory. Markets are efficient. It's just a temporary glitch. Okay, let's look at the glitch. Australia suspended, US suspended, UK out of stock, India defaulting, Costco rationing, Shanghai drained, lease rates are at 40%. That isn't a glitch. That is a collapse. You can ignore one red flag, but when the entire field is covered in red flags, you are in a minefield. This isn't a conspiracy. It is data. It is math. And the timing, Friday, January 30th, the last trading day of the month, the last day of the week. Do you think that is random? Big moves always happen on Fridays. It's when options expire. It's when contracts settle. It's when they try to shake you out before the weekend. January was a monster month. Silver was up 65%. It was breaking records. So on the very last day, they smashed it down. They wanted to send a message. They wanted to scare the weak hands. This is how wealth moves. It moves from the impatient to the patient, from the emotional to the calculated. Your fear is their buying opportunity. But zoom out. Look at the decade. This crash didn't start today. The fuse was lit 5 years ago. Silver has been in a deficit since 2021. For 5 years straight, we have used more silver than we dug up. Every single year, the world mines about 835 million ounces. That sounds like a mountain of silver. But here is the problem. The world eats over 1 billion ounces. Solar panels, electric cars, smart missiles, iPhones, medical devices. Every single one of them needs silver. It is the most conductive metal on the periodic table. You cannot build the future without it. Plus, you have investors buying coins. You have jewelry. We are burning the candle at both ends, and we are about to hit the middle. We have been digging a hole for 5 years, and now we are falling into it. Since 2021, the world has used more silver than it can find. The deficit is massive. We are talking about 800 million ounces missing. Where did that extra silver come from? If we used more than we mined, how did we survive? We survived by eating our leftovers. We raided the vaults. We melted down old stockpiles. Think of it like a bathtub. The faucet is the mine supply. That is the water coming in. The drain is the demand. That is the water going out. For 5 years, the drain has been wide open and the faucet has been dripping. The water level in the tub has been dropping. And now the tub is dry. You can hear the sucking sound at the drain. The Shanghai vault's critical. The comics emptying London drain to feed India. The buffer is gone. There is no emergency stash left. There is no slack in the rope. When demand spikes now, there is no inventory to absorb the shock. This isn't the hiccup. This is the bill coming due for 5 years of excess. So what happens next? We are entering a new world. A world where paper price and physical price get a divorce. They are splitting up. The paper price on your screen might keep crashing. It might bounce around. It is a manipulated number controlled by algorithms. But the physical price, the price to actually hold a bar in your hand, that is going to the moon. We are already seeing it. Japan is paying 60% over the spot price. Dubai is paying 40% over. The screen says $95, but if you walk into a shop, the guy behind the counter says that will be $130, please. That gap is real and it is going to get wider. Now you might be asking yourself, has this ever happened before or are we in uncharted territory? I'm going to tell you exactly how this story ends because we have seen this movie before. But first, you need to understand why the banks are terrified of what happened in 1980. Back in 1979 and 1980, during the last great silver squeeze, the same thing happened. The paper guys tried to hold the price down. The physical guys bought everything in sight. Dealers ran out of bars. Premiums exploded. Eventually, the paper market broke. It had no choice. You cannot suppress reality forever. Silver went from $6 to $50. That is an 800% explosion. It made clear-throat millionaires overnight. I am not saying it will happen the same way. The rules are different now, but the physics are the same. Paper markets can print contracts. They can print promises, but they cannot print silver. They cannot mine it with a keyboard. When the physical metal runs out, the price has to go up. It is a law of nature. It is gravity. Manipulation can delay the inevitable, but it cannot stop it. We are standing on the edge of that cliff right now. Mints are closing. Vaults are empty. Lease rates are sky high. So, look in the mirror. Who are you in this story? There are 3 types of people watching this video. Type 1 is the victim. They are scared. They see the red line on the chart and they panic. They sell their silver at the bottom because they don't understand the game. They get eaten alive by the sharks. Type 2 is the tourist. They are confused. They see the price crashing, but they see the mints closing. Their brain can't process the contradiction. They freeze. They do nothing. Type 3 is the predator. The predator understands the game. They see the paper crash for what it is, a gift. They see the physical shortage for what it is, a ticking time bomb. They aren't selling. They are buying. They are taking the silver from the panic sellers and locking it away. Which one are you? Let's review the facts one last time. The price dropped by 22% in that same week. Perth Mint closed. US Mint closed. Royal Mint out of stock. India defaulting. China drained 27 tons in one day. Lease rates 39%. The price went down. The metal disappeared. That equation does not balance. And when equations don't balance in finance, someone is about to go broke and someone else is about to get incredibly rich. But there is one final piece of the puzzle. The end game. One of these things is a lie. And I promise you, it is not the empty vault. This is what a rigged system looks like when the lights turn on. This is what happens when a market built on paper promises slams headfirst into a concrete wall of reality. They smash the price on the screen, but the physical metal is gone. You have to decide which side of that equation you trust. Do you trust the glitched computer program or do you trust the empty warehouse? The price crashing while the product vanishes is not a market. It is a magic trick. It is a sleight of hand. They are waving a red flag with their left hand to scare you while they sweep the real assets off the table with their right hand. Now you know how the trick works. But silver is just a warning shot. It is the canary in the coal mine. While everyone is distracted by this silver crash, there is something much bigger happening in the banking system that explains why they are desperate to hide the truth. There is a specific deadline coming up that forces these banks to cover their tracks. And if they miss it, the entire paper scheme implodes. I found the documents that explain this reset date and what they are planning to do to your savings when it hits. It is darker than just a silver shortage. Click this video on the screen right now. I break down the exact timeline and how to position yourself before the window closes. Click it and I will see you.